Do you think now is the best time to load up Tesla stock? Others believe that Tesla's current valuation, although it may be considered low, is actually the best time to buy stocks. In fact, most believe that investors should take advantage of Tesla's stock's current low price tag before it goes up again. You definitely would not want to miss this. One experts believe that the longer the outlook, the more beneficial it is to go against conventional wisdom. That said, although it appears to be the worst possible time to buy Tesla stock, with the stock having just hit its lowest point in 2 years and seemingly in free fall, it still makes sense to invest in the leading EV company today. Tesla is still trading below 200. Because of this, investors are hesitant to buy Tesla shares, with Tesla stock 52 from its highs. Investors may be contemplating adding Tesla shares to their portfolio. Get an extra $10 cash, open an account, and deposit any amount on Moomoo. It's a limited bonus for celebrating Moomoo's 10th anniversary. Take a look at the following link. Moomoo is an excellent stock trading platform with a variety of innovative, user-friendly capabilities. I believe many of you will find it really beneficial, particularly if you wish to be more actively involved in your investments. For instance, learn when it is appropriate to purchase and sell stocks. Although the underlying business of the electric car manufacturer is growing rapidly today, the entire globe is undoubtedly facing intense macroeconomic uncertainty, which is not reflected in Tesla's recent business results for the third quarter. Over the last 3 months, Tesla shares have lost about a third of their value. Year to date, they have lost more than 40%. The stock price pullback has probably left many investors wondering if this is a good time to buy the stock after all. Link in the description below. Tesla's surging vehicle deliveries. Total third quarter deliveries increased 42% year over year to 343,830, fueled the company's strong quarter. Revenue soared 56% year over year, and free cash flow for the period increased 148% to about $3.3 billion. The company's cash position also grew to $21.1 billion. Tesla's stock fell last month, even though the company's bottom line topped expectations by 10% at $5 per share when it released its Q3 earnings. Top-line growth was lackluster, with sales on revenue of $21.45 billion, missing estimates by 4%, even though there were a record 343,830 deliveries during the quarter, which also fell short of projections by a small amount. Tesla's stock has dropped over 46% year to far, underperforming the S&P 500's minus 22%. Tesla, even after 3 years, shares had increased by 721% to crush the benchmark plus 7%. Together with its peer groups, according to Tesla, full-year production will increase by 50% over 2021. During the firm's third quarter earnings call, Tesla Chief Financial Officer Zachary Kirkhorn stated that the business expects delivery growth of slightly under 50%. Tesla CEO Elon Musk also hinted during the call that the company's vehicle order levels remain strong for the fourth quarter. I want to stress again how strong the demand is for Q4 and how we hope to sell every vehicle we produce for as long as we can. Musk continued to clarify, with investors growing less thrilled with Tesla's progress after its Q3 announcement, with the EV business shares being down around 14% year over year. The company's outlook is becoming increasingly significant. Top-line growth is also anticipated, with sales expected to climb 54 this year and another 39 in fiscal year 2023 at $115.38 billion. This is more than quadruple pre-pandemic sales of $24.57 billion in 2019, currently trading at around $180 per share. Tesla earnings are now expected to rise 79 to 4.05 cents, and the fiscal year 2023 earnings are expected to rise another 30% at 5.29 per share. Although Tesla is known to be extremely volatile, so are other stocks. In 2021, for example, Tesla stock was following a downward trend. Despite this, Tesla remains the industry leader in the EV market and trades at a significantly lower price than its decade high of 45,336x and the median of 236.9x. Additionally, established automakers like General Motors and Ford are at very different stages of their corporate lives, and aren't experiencing growth like Tesla. The managing director of Vios Advisors at Rockefeller Capital Management, Michael Bachus, told CNBC in June 2021 that Tesla's roughly 24% market share at the time and its ambitions in the electric vehicle and clean energy markets make it a name worth watching. Tesla is going to continue to be the leader in the industry, especially for the foreseeable future, Bachus stated on Trading Nation. Whenever you think about Tesla, you think innovation today. Trend, an investor, advised buying it whenever you get the chance to buy it as Tesla stock dipped at the time. After the EV company released production and delivery numbers that fell short of Wall Street's expectations, Tesla stock is once again experiencing a dip. However, some experts argue that now, when the stock price is lower, is the best time to buy Tesla stock. In fact, star investor and well-known Tesla bull Cathie Wood and her firm ARK Invest bought Tesla shares twice in October, once following the company's Q3 earnings call and again after the EV company released delivery and production numbers. Additionally, Wood's ARK Invest bought Tesla shares in several funds a few days ago for the majority of the even while Tesla's stock may appear expensive given its valuation. The business has consistently generated enormous revenue and earnings growth, and its yearly earnings projections indicate that its growth trajectory is still very much intact. Although most analysts think that Tesla stock is better suited for long-term investors than for short-term investors, experts believe that the future for Tesla looks bright for investors looking years or decades down the road. Considering the long-term bullish investors, countless firms are striving to achieve fully autonomous vehicles, but it will be challenging to overtake Tesla's lead given its current state of development. Tesla has been developing its cameras, radar, and GPS technology for years to the point where its cars can almost drive themselves. In addition, the company has invested billions of dollars in the construction of 2 new manufacturing facilities in Texas and Germany, as well as upgrades to its Shanghai plant, all of which are intended to increase overall production. With a monthly record of 83,135 units in September, the China plant is closing in on its annual production target of 1.1 million vehicles. The company has also stated that there is a greater demand for its energy division, which includes solar rooftop installations and battery storage, than there is supply. Sales from this division accounted for 5% of total revenue in the third quarter. Despite challenges in its supply chain and logistics, Tesla is clearly doing well. Although the company expects production to reach its 50% annual growth target, the company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Customers will take ownership of those vehicles in the fourth quarter. Experts believe that investors shouldn't rely on any stock to guarantee a certain return over just 1 or 2 years because there are numerous factors like the current supply chain risks. Despite being best recognized for being a divisive leader, Elon Musk has also made bold forecasts. As of right now, it seems like things are going well for Tesla, especially in comparison to the rest of the auto industry. According to a report by Cox Automotive and auto dealer marketing and operations software company, U.S. auto sales will fall by roughly 9% this year. The Tesla semi-truck was first announced nearly 5 years ago, and deliveries are scheduled to start next month. Most predict that global trends will be equally awful, if not worse. Although Tesla's current price-to-earnings ratio seems expensive at first glance, investors may find the valuation more appealing when they take into account the company's strong momentum and management's optimistic outlook. Tesla's strong business performance during a challenging environment highlights the automaker's momentum and the powerful demand for fully electric vehicles. Tesla continues to land, although there may be better purchasing options in the future. A Zacks ranked number 3 holds its position in the top 27% of over 250 Zacks industries with its automotive domestic industry. In addition, electric vehicles still make up a relatively small portion of the auto industry market, but there is still a lot of room for growth. Tesla stock also looks poised for growth, and the company's earnings estimate revisions from the previous quarter indicate that patient investors may be rewarded for holding the stock. Zacks price target indicates a 66% increase from the present prices, which experts consider to be excessive risk for Tesla stock. High reward shares. Don't forget to subscribe to this channel immediately.